All right, so welcome and thanks for joining me. Today we're going to take a look at which trades or which stocks do I not do theta trades on, because there's a lot of different stocks out there and some of them are great to do theta trades on and others are not. So I'll give you some thoughts on this as we go into the panel. But before we get started, feel free to reach out if you struggle with any of these trades to go ahead and grab a coaching session one-on-one, or even if you want to work together for 3, 6 months or 9 months or even a full year. Just go to the tradersfly.com site and head on over to coaching and I'll be sure to work with you. All right, so let's go ahead and get into this. And when we go in and doing theta trades, we're really trying to aim for more, money from time decay or time value. And time value decays differently on different stocks. So for example, if I go ahead and look on something like a, not Facebook, let's go to Ford right here. And we'll just use a 30-day as a baseline. So we'll switch it to theta. You can see this decay is 0.01. So if I go in and sell this single option contract, okay, right here, and I just go to this Ford area, okay, this decay is only about $1 a day. So in 30 days, you're making 43 bucks. So it's almost not that, not that it's not valuable, but it's a very slow theta decay or time decay. I would much prefer to do this trade or a trade on something like Ford for doing something based on movement or delta, because there's not a lot of theta baked in. Whereas when you go into something like, let's say, a Microsoft, and we go in and sell a 30-day option on here, okay, this one just functions and behaves a lot differently. So this decay is $16 a day. So this one is just much more valuable from doing a theta decay. So if I was to set up a spread on Microsoft 30 days out at about, let's call it a 10 delta, and set up an iron condor, and let's go to a 10 wide here, and then let's go to a 10 delta over here. Let's go to about a 10 wide there. You could see the premium collection on this is roughly $215 for one iron condor, and the theta decay is about $6, $7 a day. So that's pretty good. But when you start looking at something like Ford, okay, and you start trying to build an iron condor on something like this, just to get into a delta of over here, let's go to about a 10 delta here. So let's start building this out. I got to go to a 13, maybe do 15, and then over here, delta, well, this is probability in the money, so maybe over here I can't even get a full spread perfectly because the strikes are not there. So it's a little different. But what you'll see is even there, the theta is like $1 a day. And yeah, you are only risking $129 to make 21, but then you have commissions that you also have to pay for. $2.60 to get in, $2.60 to get out, so about $5. So $5, and then you're making 20 at expiration in 30 days. The theta trade on here is just not as worthwhile. So on trades that don't have a lot of premium, don't have a lot of theta decay, aren't as volatile, something like this with a lower volatility, cheaper price, there's just no premium in there, it's just not worth doing. So things like on Apple, they become much more worth it because they have some kind of premium baked in right here already. There's just some premium in there that you could deal with, even though the stock is only $136. Even on stuff like we go to Pinterest, there's just not a lot of premium involved in this. We've got some premium, but not a lot. So on trades like Pinterest, I would much prefer to do something. It's not to say you can't sell premium on it, but these stocks that are like, $20 a share or so, they're just much more worth it to usually do something more directional. So that includes things like, let's say Bank of America, super slow stock. So you're more than likely looking for something more along the lines of movement. Okay, I'll take a look. Bank of America right here. There's almost no premium here on this. So I'd much rather look for something more on the movement. So I'd rather set up spreads, let's just say vertical spreads that are either bullish or bearish. And here we'll do like a 33, 30, let's see, 30, let's go 34. 32 spread right here, where now at least I'm risking 100 to probably make about 100. And now I'm just looking for a directional move. So these kinds of are the spreads that I much more prefer on these cheaper stocks, just because the theta is just not there. So when you're looking for trades and setups, on a stock like this, like a Bank of America, there's just no premium involved. And just by doing another iron condor here as an example to show you, look, I could do an iron condor setup, get rid of this other vertical right here. And you can see, yeah, I've got myself an iron condor. I'm making $1 decay a day, trying to collect maybe $25 on a risk of 175, but there's barely any decay happening. So for you to really make any form of capital from this, you have to trade larger. And even then, at 20 contracts or 20 iron condors, it's only $500. And then not to mention, you still have, about $100 commission in and out. So it gets expensive. You're just paying, 20% just in commissions, if not more. So be very careful with some of these. And this is, some of the trades that I kind of stay away from on the theta side, but they're really good for directional trading. So when you go into like a directional move, you don't have to risk a lot. You just do 3 or 4 contracts and already you're up to $315 of risk. And if it pops just a buck or two, you could already be out profitable about 150, 200 bucks. So they're great in this way. They're not as good in the theta way. So there's always a trade-off or a pro and a con when you're looking to do these trades on different vehicles. And different vehicles are set up to be a little bit more effective with some strategies versus others. So understand what you're doing on which vehicles, so that way you get a better, a better setup for your personal style or strategy. Anyway, I hope that helps. Truly appreciate you joining me. Just gives you some ideas maybe on which stocks I don't care to trade a theta on or try to collect premium. Sometimes I will collect some premium on them in order to make up or pay for something else. So there are different ways of doing that. That's a little more advanced and things I talk about more in the coaching and mentoring section. So feel free to reach out to me if you have some questions about that. But as for just doing a basic general spread for theta collection, some of those cheaper stocks under $100 are not always worth it, and you might want to balance those out with some delta movement to making it more worthwhile on those spreads and strategies. Anyways, thanks again, and I'll see you next time.